Hey everyone, we got some great news for NIO stock investors as the company reported quarterly delivery numbers that were better than even the highest expectations from management. So I'll go over the details of these production and delivery numbers and what it could mean for NIO stock investors. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so NIO saying that it delivered 21,209 vehicles in June, which was up 98% year over year. The company also delivered 57,373 vehicles in the 3 months ended June 2024, and that was up by 144% year over year. So excellent growth numbers here from NIO. Now, I highlighted in the beginning of the video that these quarterly delivery numbers were better than even the highest expectations from management. You could see here management gave an outlook for the second quarter of 2024. Management said that the company expects to deliver between 54,000 and 56,000 units for Q2, which would have been growth between 130 and 138% year over year. It turns out the company actually delivered 57,373 vehicles in the quarter, which was up 144% year over year. So much better than expected. So that's great news for NIO stock investors. One more thing that NIO highlighted is the breakdown of the deliveries. So the deliveries consisted of 11,581 of smart electric SUVs and 9,628 of smart electric sedans. So this is a worldwide phenomenon where SUVs are more highly demanded by consumers than sedans. And that's particularly good news for NIO because remember, the Envo brand is launching the L6. It's in pre-order now, and that's an SUV. And that's a lower priced SUV that's going to compete with the Tesla in China. So that's great news for NIO indeed. All right, so the next thing for NIO stock investors to keep in mind is the vehicle margin. Now, NIO did not provide us an update on this number in the sales report. They will do that when they report quarterly earnings in a few weeks' time. Now, in the most recent update, their vehicle margin was 9.2%. compared with 5.1% in the same quarter the prior year. So year over year, they increased their vehicle margin by 4.1%, which is a really good increase. But from the previous quarter, it was down. And in the previous quarter, it was 11.9% and it fell to 9.2%. Management said the decrease in vehicle margin was mainly due to lower average selling prices as a result of increased promotional activity during transitioning products, changes in their product mix, which was partially offset by decreasing material cost per unit. So when NIO updates investors of their vehicle margin, you want to keep this in mind. Did they increase their vehicle margin from this 9.2%, or did it fall further? If it fell further, that would be a troubling sign that I would pay even closer attention to, because that would indicate a falling trend with increasing sales. Not mostly desirable. I like to see profit margins increasing with increasing sales. That suggests the company is achieving economies in scale, whereby the cost per unit is decreasing as they're producing more units. You should expect to see that in most businesses. NIO is a little bit special because they're spending so much on newer models. They're spending so much on research and development. They're losing money on the bottom line. They're still in the very early stages of growth. And so their profit margins are not like on a linear path upward. They make good progress for a year or two, and then they take a step back to retool, reinvest in growth, and then go back in that upward trend here. We haven't seen consistent upward moving profit margins from NIO because it's still in very early growth stages. The key is customer demand for its products is robust, as indicated by the latest quarterly sales numbers. I discussed a little bit about NIO's Envo brand and the first model, the L60, on May 15th, NIO announced the Envo brand and L60, which will be a family-oriented smart electric mid-size SUV, and they're now accepting pre-orders in China. Now, I've heard rumors that they had tens of thousands of pre-orders, but I've cautioned investors to take those numbers with a grain of salt, because as you've seen, if you've been following the EV industry, there were several companies that had tens of thousands of pre-orders, and then when it came time to deliver the products, those pre-orders were getting canceled. Customers were not accepting the cars that they had pre-ordered. And so these pre-orders, even NIO's management have said that they're not a strong indicator of what sales will be like once the cars are ready to be shipped and delivered. Still, it's a good sign that there's interest and there's tens of thousands of people that are interested in this lower priced SUV. And as Tesla has proven, there's a big market in China for SUVs in that price range. And I believe the L60 is going to be at a lower price point or a similar price point to Tesla in China, Tesla's SUV in China. So it puts it in a competitive position to capitalize on this market. And it's not all good news for NIO, right? There is signs of tariffs in Europe against NIO's models, so its expansion into other countries outside of China could be a little bit troubled. But inside China, they're doing a great job expanding and gaining market share. Now, NIO stock price has gone down in the last year. Despite these recent developments making good progress, you saw the sales numbers up 140% year over year, and still the stock price has underperformed significantly over the last year. It's down from over $12 per share all the way to $4.87 per share. And NIO stock investors might be wondering, why is the stock not responding to these developments in growth? It's growing so much. It's got the new brand coming out. Sales are doing great. And the answer is in profit margins and profitability. Despite NIO's excellent top line growth, like I talked about a little bit earlier, it's still losing money on the bottom line, and it hasn't made consistent progress towards profitability. It's been ups and downs over the several years it's been operating. So investors, I believe, want to see more progress on that front. And then overall, investors have been sour on Chinese stocks, and so that's bringing down valuation for NIO as well. Companies like Alibaba and others are trading at very cheap valuations, and Alibaba is an incredibly profitable business. So it's not just NIO that's facing headwinds here. It's roughly the entire Chinese market where their stock prices are not performing well. Regardless of how the stock price is performing, these latest developments, the latest delivery numbers, are great news for NIO stock investors. The company beat even the highest expectations in deliveries, and they have that newer model coming out. So this is great news, a step in the right direction for NIO. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.